This is the Solution Talk, building trust through blockchain in green finance. Please welcome your host from the United Nations Development Programme, Aiaze Mitha.
Hello, good afternoon, everyone. My name is Aiaze. I am from the UNDP, running a global digital finance and fintech for sustainable development practice, and it's going to be my pleasure and privilege to be moderating and hosting this panel. We're going to be talking about blockchain and green finance. And some of you might wonder, why are we connecting the two worlds together, blockchain and green finance? Well, we've seen how technology is actually disrupting the way we think about development finance in so many different ways. We have seen that with the advent of pay-as-you-go models in developing economies, unlocking access to capital-intensive utilities for millions of people. We've seen that through circular economy models in more mature markets. And we've started seeing this in how digital tools and remote sensing is enabling us to perform systematic, automated, cost-effective risk assessment and impact analysis on environmental and social outcomes. And so, yes, definitely technology has a role to play in green finance and could actually completely transform the way we think about nature finance and green finance in general. And so for the discussion today, I have the pleasure to have a set of distinguished panelists who I'm going to invite to come and join me. If Paula, Marianne, and Carel, you want to join me on stage to get the conversation started. And thank you very much again for joining us. And I would like, please, some applause for the panelists as well before we start. And so before we engage in this fascinating conversation, I would like to ask each one of the panelists, and maybe we start in this order, since Paula, you're on the far left. Paula, Marianne, and Carel, to briefly introduce yourselves, please, to the audience.
Okay, it's working. Hello, everyone. Nice to be here. I'm Paula Palermo. I'm originally Brazilian. My background is in architecture, urban planning, and economics, and I was always passionate to solve our most pressing development challenges. And I got into technology with financial inclusion and fintech, and now at Nature Tech Collective, which is a collective of solutions in the nature tech space, coming from nature data and nature technologies, and our main goal is to close the nature finance gap. So we have a lot to discuss today. Thank you, Aiaze.
Hello, everyone. It's a pleasure to meet you. So my name is Marianne. I wear a number of hats. I chair a foundation called Nature Finance. There we have a specific work stream on nature, on biodiversity credits, and we're looking quite a lot on how to apply technology in that market for enabling high integrity. Then I also am seconded to the Task Force on Nature-Related Financial Disclosures, where I work much more in the standard setting space, which we need sort of as a foundational rails to actually digitize on top of that. So it's a pleasure to meet you, and I agree we have a lot to discuss, and the more it can be a conversation, I think the better.
Hi everyone, my name is Carel De Jager. I'm an engineer. Originally I've been a chemical engineer, and then around about 2016, it's 8 years now, I've discovered cryptocurrency, and I was immediately hooked, and since then never taken a day off. So for the last 8 years, I've been doing a lot of training. First, that's where I started, training all over the world, and then later product development, and building various crypto and blockchain-related products, working with governments and corporates, more on the traditional finance side. And I represent an organization today where I lead a blockchain R&D team. That's a Council for Scientific and Industrial Research in South Africa. It's a government-backed R&D organization, and there we build various blockchain intelligence, self-sovereign identity, payments, and tokenized assets type of products.
Great, fantastic, thanks very much. So as you can see, we have a panel of experts coming from different backgrounds, technology, some non-technology experts, but getting into technology, and I hope that's going to help us connect the dots and have a very interesting conversation. Perhaps if we could start with you, Paula, and that's going to be a difficult start or difficult question, because I would like you to explain to us how tokenization of finance can actually help unlock, and I'm sure you'll explain what tokenization of finance is, but how tokenization of finance could help us unlock more private sector investments into nature conservation and nature protection. And if you could give some illustrative specific examples to make your points in the field of green finance, nature finance, or biodiversity credit markets, that would be very helpful for us to understand the opportunity, please.
Sure, it's actually very challenging, but there is a lot of advancements already in the blockchain space. I get into this when I saw what Bitcoin was doing for peer-to-peer transactions and said, okay, maybe this type of technologies and solutions can help you to solve other problems in the banking and finance system. So with ledger technologies, decentralized ledger technologies, actually this is a type of system that you have all the information on chain, which is called, and also you cannot change this information. I'm sure you can help us to explain much more the technological part, but in the finance, also from the financial inclusion side, we need trust, and we need also more advanced systems for finance, and technology can bring us a lot of technologies that can make it more fast, easy, and transparent. And I think one of the most interesting applications, we have a lot of solutions already in the finance space, which is helping on tokenization of bonds. So tokenization means transferring this into tokens, which have cryptocurrency, crypto technology behind, which is a type of cryptography system that is very hard for you to crack. So this technology can help us to have secure transactions. And on the technological side, for the green finance space, the most interesting things are on the transparency and trust layers that we can build. So on the bond sides, there is a lot of technologies that are helping on the insurance and life cycle management of the assets differently. But on the green finance side, which is actually nice, it's that all the data that comes behind can stay there, and we can verify this data and the origin of this information, which is also something that can unlock trust in finance and where we need to finance the important things of the world. So I think some examples, one very nice example, it's from BIS and Project Genesis, which was with BIS Innovation Hub and Hong Kong Monetary Authority. So they created some pilots in using carbon forwards to build this into bonds, and also doing tokenized bonds. And this has a lot of interesting solutions in terms of how this data can be verified to build trust for regulators, investors, and all the value chain. And on the biodiversity market side, this is also very interesting because we can connect real on-the-ground information with digital layers inside digital assets. So for biodiversity specifically, a lot of methodologies that can be transformed into data. So this combination of blockchain, Internet of Things, and then also transactions can help us to make everything faster, and also that we can see the invoice of things, and we can see where this data is coming from. So two of our members are solving challenges related to how we can build digital assets in biodiversity. So Savimbo is one of them, and they just got a methodology approved that is actually using a biodiversity unit into a digital format, and they use communities to create fair trade biodiversity credits, and you can buy them online, but also with this secure system that you can see the invoice and the data which is behind. And also another nice solution is in Invest Conservation. They are also members of ours, Nature Tech Collective, and they tokenize 1 hectare of land. So investors, they can invest and buy these credits, which are digital credits with all the information inside and all the things that you need to verify in terms of also the methodologies and then the compliance systems behind these tokens.
Thanks, Paula. So there's a couple of things you mentioned that I want to pick up on, but I'll explore that with Carel and Marianne. One element or one key feature you've actually referred to several times, if I heard you correctly, is transparency and trust. And that type of technology is actually bringing more transparency and more trust into the data points that are being used and into financial transactions. And so maybe, Carel, since you're the technology guru here, and try to simplify it also for the audience, please, but how would you say that blockchain today is able to bring that layer of trust and transparency in green finance, broadly speaking? And how is it helping us address some of the inefficiencies of markets that we know today from traditional markets like greenwashing and other types of problems we face? How does blockchain help us solve that?
Okay, yeah, that's an interesting question. So the first thing to note is that it's not only trust that a distributed ledger or a blockchain system provides, but it's also decentralization. And you shouldn't deviate too much from the decentralization part, because you can, of course, replace the trust with centralization. And I'll give you an example of that. So sustainability and green finance, a little bit more general, suffers from a problem called the tragedy of the commons. So it's for those that don't know, maybe the tragedy of the commons means that if you take an action, then you might get the full benefit of that action that you take. But the harm that you cause is then shared among the greater society. So a typical example is if you make a fire, then you can be warm while the fire is burning, but obviously the smoke is inhaled by the greater society that does not share in that warmth of the fire. Now, a blockchain system fixes this in a decentralized manner. It's actually the first system ever that we've invented as humans that's able to fix the tragedy of the commons in a decentralized manner. Because if in a blockchain system you are incentivized to always stick to a predefined set of rules, and if you deviate from those rules, then you are punished. So another example of that is, there's a lot of examples, but I'll pick this one now, is imagine you have two little children, and these two children need to share a bar of chocolate. Let's say their mother gives them a bar of chocolate, right? Now, there's a few ways that they can solve this problem of sharing the chocolate. First, they can appoint a dictator, their mother, and she can decide, she cuts the chocolate in half and she decides which child gets which piece. That's one way to solve it, and it will work, and that's how we solve many problems in society. Another way is to solve it through violence. All right, so the two children will just fight over it, and whoever wins the fight, he gets the chocolate. And that's another way that we typically solve problems in society. But the third way is very analog to how a blockchain system would solve the problem. And that is a decentralized protocol. And this protocol goes like this. So one child is appointed to cut the chocolate in half, and the other one can choose which one he wants. So now you have a system in which all parties are incentivized to play fairly and according to the rules. Because if you do deviate from those rules, then you will be punished. And I think if we think about blockchain and green finance, sustainability, and the stakeholders that's involved in that, we need to find a way in which we do not have a central player, a dictator, making the rules, in which we do not need to fight according to and try to cheat the system. That's where greenwashing comes in. But in which all of the incentives are aligned, in which we can have a free and fair system which is decentralized, and everyone is incentivized to stick to the protocol.
So let's try to continue on this chain of thought and maybe try to make it concrete again in terms of examples and applications. And Marianne, we've learned a lot from our experiences in the voluntary carbon credit markets and the mistakes we've made so far, and some of the inefficiencies and deficiencies and shortcomings of these markets. Now, you've been also very much involved in the next evolution of that, the biodiversity credit market. How would you see blockchain technologies come into the biodiversity market now to add some value and help us overcome some of the challenges?
Yeah, I think if we look at the biodiversity credit markets, they can, by 2050, they can unlock about 70 billion of finance for nature, which is something we really need. Now we have the nature restoration law, for instance, in the EU, and it cannot be only the public sector paying for that. So how can we incentivize retail clients, but also institutional investors, etc., to get involved in all the nature restoration and nature investment that we need? Currently, that's a really big headache. But we looked at exactly the voluntary and also the compliance carbon markets, and now everybody's talking about also at this conference, you would put money into one ecosystem service, right, which is carbon capture and storage by trees. But then what about the rest of them, the 21 rest ecosystem services? You can't really invest in them. They're not very investable unless you invest into a farm, into the land and the regeneration of that land, etc. So now exactly on the back of the carbon markets, we have the biodiversity credit markets sort of standing and waiting. And we actually have them in 40 jurisdictions at the moment. Most of them, and the oldest one is in the US. It's a mitigation market where there are biobanks. So basically that was because quite a number of years ago, the US adopted a known as net loss policy. So if you were investing in infrastructure project somewhere that did drain a wetland, you needed to then offset that by the restoration of a wetland somewhere else. So in the US, you have biobanks, and in the biobanks, you can basically buy a piece of wetland to offset the draining of a wetland somewhere else. So we have that in 40 jurisdictions. And now with the Global Biodiversity Convention, what is coming online is that we're getting biodiversity credit markets, which are not mitigation credits. So they are not that you pay your debt for destroying nature somewhere else. You pay actually for biodiversity net gain, so restoring nature. And we have the first really interesting one in the UK with the legislation, which is the biodiversity net gain. So every infrastructure project needs to have a 10% biodiversity uplift after you've designed your infrastructure. So there you have a market that needs to start to work, just like the biodiversity credit market. But how do you actually do that? Because for a long time, first of all, the prices on the carbon credits were so low that it was actually cheaper for you to emit carbon than it was to change your business model. So you could just buy the carbon credits and not change your business model. So that was one thing, the pricing side, and then the greenwashing side. And we see scandals to this date, right? That, you know, these carbon credits, they've been double counted. This forest does not capture as much carbon, etc. So what we can definitely learn is that we need to come in with building that trust from the beginning. And I think exactly what we heard Carel talk about, that if you can go in, so now if you have to buy a carbon credit, it's a pretty PDF-heavy approach, and you have a PDF-heavy register with Vera or Gold Standard or the national registries. But why not design the biodiversity credit markets as born digital, where we start with, like you said, we have sensors, so we can capture down to a small pixel on the Earth what does the biodiversity look like now. We can project what would be the increase using satellites, using sensors, etc., and put that on a ledger and present that to the investors that wants to invest. And also that they can follow the uplift over time just on their digital wallet, because how biodiversity and nature acts is completely contrary to financial markets. So biodiversity credit uplifts happens in a 30-year time frame. Financial markets are short-term by nature. So you need to get the cash up front to be able to invest in the ecosystems that will develop the uplift. But you cannot get investors to just invest in a good story. Well, you can sometimes if it's early stage, but you need that hardcore data and you need that promise that the biodiversity uplift will come. And I think that's where the ledger is extremely valuable, that you can actually track when the biodiversity credit, the uplift comes, and that nobody can run with your money, and it's all digital. And then for the price side, for so long, carbon credits were priced too low. So how do we get fair prices to people that say, I'm going to take out a piece of land and I'm actually going to restore it, I'm going to regenerate it, I'm going to measure the biodiversity uplift on this? There we really need investors to get that asset insured and get that biodiversity credit insured. Otherwise, there's going to be no way that the financial community is going to engage in these new types of markets. And I think there we have some pretty good use cases from insurance in terms of parametric insurance, also of just insuring natural assets and putting that on a smart contract so you can have so it's just up to the technology, basically, getting the data to decide when will you have an immediate payment to save the biodiversity credits. So, yeah, but it's a very new field.
And you've taken us on a journey already from the opportunity to some of the challenges. And those are the challenges that I also see across most of the pilots I've been working on in terms of aligning incentives when it comes to issuing a financial instrument to mobilize private capital towards conservation or restoration of a particular ecosystem, or whether it's about a green bond tokenization. There's always that challenge of aligning incentives and stakeholder interests. And maybe I want you to react, Paula, to what Marianne has been saying in terms of the barriers, because obviously the opportunity now seems clear, and yet it's not happening at scale. And it's not happening at scale because there's a number of barriers and challenges, perhaps from a market perspective, and you've already started on this, Marianne, perhaps from a technology perspective as well. You know, there was that perception that blockchain was a hammer looking for a nail for a long time. Now it looks like we have practical use cases that could work. But what are the challenges from a market and technology perspective that you see? And we'll explore them a little bit further with Marianne and Carel afterwards.
That's a great point, and I think it's the biggest challenges. And sometimes I think we working in the sector, we are crazy people, because there are two markets that are still to be proven, and then also to be scaled some way. So we have a lot of challenges related to nature finance. As Marianne said, we also have some solutions already that still need to get to the market. So we have this issue with finance itself that want fast profits and returns, but we have nature that takes another time to grow and to be restored. And we have the regulations coming behind that it's actually solving these problems by forcing people in some sides, but also creating some new market opportunities, such as we are seeing right now with new biodiversity funds coming, new types of assets, debt and credit instruments, and also forwards in terms of how we can fund these types of assets that are not related to a profitable path as we are used to see in finance. And there is a lot of complications in terms of methodologies, because it's very hard to see also from the carbon markets that we depend a lot on carbon markets to actually unlock the nature markets, because there is a lot of things to be proved also in terms of transparency, how we trust in these types of assets and credits, and also coming now with a new format saying, okay, now not only carbon matters, but also biodiversity, also other parts of and aspects of nature. It's complicated to come to a market that is not super proved. And at the same time, technology is also in a similar path, because it's very hard to create units for biodiversity. It's expensive to monitor, because we have now availability of sensors, we have now capability to process data and information at scale, but it is still expensive. So we still need to get to a point that actually we can add this to financial instruments without elevating much the costs. And in these terms also, we have a big availability of data in terms of nature, in terms of what technology can bring. But also this data is siloed. We have also different aspects in technology that are still challenges for us to unlock these terms. And on the science side, there are also challenges, because it's very hard to scientists to get into the same page. So in terms of methodologies, units, how we actually use indices, because animals, they move. It's not a tree that is growing, right? So we cannot track everything every time. So how a methodology can capture this type of movements and also be secure of what we are proving in terms of uplift and benefits in terms of nature. So it's very challenging, but we are seeing a lot of solutions in this space as well. They are really promising, and is an exciting space, because we know that nature needs to be financed. We have a huge financial gap for nature, and we need to create new instruments, because the time is short and we have a lot of work to do. And technology can play an amazing role in terms of bringing us trust, also making available new types of assets, and then also instruments that can support transactions, that can support also the compliance systems, and can support many aspects of finance also for the green side of the world. So these are super challenging spaces, but also super promising in terms of new solutions that are already proven, and also new solutions that are coming every time. So we see people coming more and more with new technologies, new instruments. And some countries are much more ahead in testing these instruments, building pilots, regulators coming and creating together with the technological people and also scientific people. And I think we are seeing a lot of interesting things moving in the market in many directions.
Now, these are all super important points, and I think one of the, and on the potential side of technology, and I would like you to tell us actually, Carl, what the challenges are and what the issues are and what could be improved. But one of the aspects of blockchain in particular, working on it in the green bond space, has been to also fractionalize investments in a way that also allows the retail segment and retail investors to participate with lower coupon sizes that reduce the barrier of entry for individual investors as well, so that it's not just institutional capital that's going to solve the problem, but also retail capital that can be aggregated to solve the problem. But if you think, Carl, of applying this to the green bond space, for instance, following on what Paula has been saying, what do you see are the core issues that we have today with technology that would need to be solved, would need to be overcome for those use cases to really start picking up and be practical?
Yeah, the problem is you cannot touch a blockchain. Like, you know, it's in the cloud and it's digital. And many of the things that we're talking about are not digital. They're real world things, that in physical things. And you need to somehow connect those to the digital world. And like Paula and Marianne also mentioned earlier about the sensor networks, those are as important as the blockchain itself. And that's called the Oracle problem, or the last mile problem. That's a huge issue, is to have a reliable connection between this real world asset and the digital version thereof. Because if that connection is broken, then you have a much worse solution than you would have had if you did not implement a blockchain. I think that's just a golden rule. If you don't need a blockchain, it's almost always better not to have one. So it's definitely don't be that hammer that's looking for a nail. So that part, and data authenticity is extremely important. We've seen that go wrong many times. One example is, for instance, Walmart that tokenized their lettuce heads that they put on the shelves in the US. That was a proof of concept. And the way that they've made that connection between the physical asset, the lettuce head, and the blockchain version thereof was through a QR code. That's a very weak connection, right? So because you can just take the sticker off and you can put it onto another one, and now your lettuce head's pointing to the wrong version of that asset on the blockchain, and now you have a terrible solution because you cannot reverse it. That data is recorded, that incorrect data is recorded on the blockchain forever. And then I think one specifically related to green bonds, one massive barrier is skepticism of crypto. It's a bit of a controversial one, but I see it a lot, especially as we work with banks. Is, you know, banks also very keen to use blockchain for payments, for all kinds of smart contract related use cases which they want to implement, but what they send a very clear message that they do not want to touch crypto. Now, if you take that part away from it, you're going to need some currency, right, to trade on this blockchain, for example, whether it's a stable coin. I'm not saying it must be Bitcoin, but it can be a regulated stable coin even. But the banks usually don't have the appetite for that, which puts them miles behind. And I think that's another barrier which needs to be overcome. Now, the good thing is, if you can overcome that, if you can have good data through highly secure sensor networks, have a good connection to the blockchain, it's all decentralized, and you have a means to exchange this value between participants, then you can do amazing things. Because now you can start implementing fractionalization, you can do smart contracts. There is no upper limit to the complexity that you can build in the back of your product. Like, you can fractionize it into millicents, you know, this massive bond, if you want to, and access a whole new retail market, especially a younger generation, which would never have been interested in a traditional bond, for example. So there is a large amount of upside, but there's a lot of barriers to overcome first.
And so you referred to one particular point, which is you mentioned regulated digital currencies and cryptocurrencies. So first of all, digital currencies can be fully regulated by central banks and can be used by people in a very safe manner. And you also mentioned the need to have an entire ecosystem around. And so Marianne, do you want to sort of continuing on that line of thought in terms of some of the challenges, but also really take us beyond the challenges into what is it that we can do collectively? What is it that public sector, governments, regulators can actually do together to try to shape this type of approach and help it scale around the world?
Yeah, I think what you said in the beginning, Aiaze, around incentives, and the problem is exactly the lack of incentives to go completely green. Unless you have a net zero target or a nature positive target as an institution, what would really, or your clients are really pushing you, which they're maybe if they're younger, but probably not necessarily, is really the lack of incentive. So I think working on proving that and finding those mechanisms where the regulators really fail to make it more attractive to make a green investment. So for instance, the bond you referred to, the BIS prototype, where what they did was that they tied future carbon credits to a green bond, mitigation carbon credits to a green bond that was to roll out renewable energy infrastructure, which would generate mitigation credits. So you, as a holder of the bond, would get first access and get ownership of those mitigation credits. So that would actually make the green bond so much more attractive to you than a vanilla bond of its equivalent. But if you don't do something like that, it's the same, basically, right? Unless you have a sort of feel-good target. So I think it's in that lens we have to look at it, because I completely agree with Carel. Blockchain is relatively complicated, so only use it where it really adds value and really help us to drive forward these green investments. So I think there are loads of challenges, and most of them are actually regulatory failures to properly price especially nature negative behaviors of companies. Pollution is not properly priced. If it was, there would be a lot of adjustments to the equity values, etc., of highly polluting companies, etc. So I think there's a lot of the blockchain needs to go in and correct those failures. For instance, on the attractiveness of green bonds, but also the fact that we have capital markets that are designed only for very large projects to get financed, right? And as you said, in many emerging markets, people just don't have anywhere to put their savings because there are like 20 companies on the stock exchange, right? So what we can see if we look at what's happening to people's savings in emerging markets, they're not being invested in emerging markets. They are invested here, or they're invested in the US, and they're invested abroad. But these are markets that have so many natural capital assets. They have rainforests, they have peatlands, they have all kinds of natural assets, but nobody invests in them. We reward extracting from them. So I think where blockchain can go in and be disruptive is to say, why do we create the same type of capital market infrastructure in these markets that have very thin capital markets? Why don't we start with saying, why does a bond need to be that large? Why can't a bond be issued on a smaller forestry project, which is saying, let's have a whole sort of wild forest on the edges of it, and that doesn't have a business model, because nature doesn't always have a business model, and let's put that on a blockchain as issued a bond on that, and then say the investor get the average of the return between the rewilding asset, which will give you zero return, and the plantation, which will give you a proper return, but in quite a long time. So you need to put it on a blockchain so you can actually issue that in a local currency to local people who can then put their savings in green assets in an emerging market rather than to put it in Germany or London or somewhere else. So I think we need to look at going from the broad, what can blockchain do discussion in green finance, to say, where can it really go in and help us, where policymakers and regulators are not helping us to unlock the green finance that we...
So very focused, granulated approaches.
I agree,
towards building projects that make sense and that are relevant.
And start to show that
as well.
Yeah.
And so how does one think about, because that obviously you mentioned government, public sector, regulators, that will also involve individuals and financial institutions and corporates as well. How does one think about aligning incentives for everyone. I don't know if you want to start, maybe Carel and maybe Marianne wants to complement, but on the incentive side, for financial institutions, corporates to use those type of approaches and technologies to really drive financing towards the outcome we are all seeking.
Yeah, it is a tough one, and it's not always one that blockchain would necessarily eloquently solve. Those incentives are quite difficult because, as Marianne also said, that a lot of these things don't have a proper business model, or it's like any public good, right? It needs to be funded, and there can be a return on it. There can be a good business model on that, but it needs to be driven from in the typical way that you'd fund a public good is there needs to be some rule set or regulation around that to incentivize that. So I think the ESG mandates have done a good job at doing that in the past, and will continue to do that. And if you think about specifically using blockchain, there's also reputational benefits to doing that. Blockchains are definitely becoming more and more acceptable, and even not only acceptable but desired. But I think the biggest one probably is opening up this financial models to a new generation of investors who've never had access to that in the past. Usually I've seen that fractionalization of assets don't necessarily do anything to demand-side liquidity. But I think that if you structure it right, then there is a huge, except if that demand side did not have access to the asset in a conventional manner. And now I do think that is indeed the case with green finance, for example. These bonds and so on. I've never bought a bond. I have no idea where to start. But I can buy crypto, and I can invest in blockchain assets. You know, so I do think that there's a massive younger generation which would like these things, and then, as I've mentioned earlier, there's no upper limit to the complexity you can do these things. Let me give you a quick example for that. So, for example, you can bake into a smart contract the fact that if you do buy something or if you do send a token, it triggers 10 other events automatically, which doesn't happen in conventional finance, right? You can't do that level of complexity where you can trigger additional events, where you can be connected to the issuer of an asset, for example, where you can do a peer-to-peer transaction. So those kind of things are amazing, and that can add to the incentives.
Do you want to add, we have a few more, we have 6 minutes left, so we need to manage sort of the remaining time, but I know you also have a lot to say on the alignment of incentives for all the different stakeholders. Do you want to add a couple more thoughts, Marianne or Paula?
I just wanted to, because I completely agree that, I mean, carbon you can't relate to, it's a gas, right? So it's not very relatable, but for some reason the young generation and everybody's finally getting hyped about a gas. But nature you can relate to, it's alive, you can connect with it, and I think that's why we've seen these bespoke, really funky financial instruments that people really like the Rhino bond or the Big Cat bond in Southeast Asia, etc. And they were probably, or NFTs in the nature space, right? And they're probably more communication instruments than they are really financial instruments, but you can connect to it, and that's why I think blockchain in the sort of the whole utility token space is actually something we haven't discussed, but which is really, really interesting in terms of, you know, people want to invest. If you're a retail side, you want to invest in something you can connect to, right? Why can't you go together and buy up a whole load of fish quotas, for instance, and leave the fish stock to restock, and then you can go as a community that all hold these fish restocking coins or whatever, and go and do your leisure fishing with all the others in that community, and you can connect on Web3 and show your fish, etc. There's so many things. It's completely open for innovation because nature is relatable. Nature is something we can work with, we can have fun with, we can talk to our children about, other than, you know, a gas in the atmosphere. So I think that's a space for the retail and for sort of that bottom-up revolution, I think we can have on the green side. And here in this conference, I think we started out with sort of the high political level with Olaf Scholz, etc. And I think for that level, what we need to think about is that we never ended up with a global price on carbon. So what's happening is that we're seeing carbon adjustment border taxes because of that. So what are we going to do with biodiversity, and how are we going to drive this forward where we don't end up with the same? We're doing the same in the EU with the EUDR, right? That is basically an adjustment tax of commodities are not allowed to come in if they have embodied tropical deforestation in them. So we're doing the same because we don't know, we haven't had any policy moves and regulatory moves on embodied nature loss and financing of embodied nature loss. So I think we need to get that policymaker community together and say, what have they done in the UK? They've done their biodiversity net gain requirement of 10% on all infrastructure. Why don't we do that globally on the sectors that are most material to nature loss, and that's our food system. It's our metals and mining, it's our pharmaceuticals, and say for the emerging markets, if you have your supply chains going into our countries, which you do, highly listed, highly valuable companies, you need to have a 10% net gain in those supply chains for those farmers that are caring for nature that you're developing your profit on. And then we can use tokenization so they can prove they have product passports and all this that the EU are doing, but build in that biodiversity net gain. That's what's going to, we need that type of policy and regulatory innovation. Then we can use technology in smart ways, but technology can't do it alone, I think.
So there's no question, we all love butterflies, pandas, whales. We finally have a mechanism for actually putting our money where our values are and what we care about. I'll come back to the three of you for a final, very quick call to action, but I want to turn to Paula because we talked about the political dimension and we talked about regulators, policymakers, we talked about corporates, financial institutions. The entire tech ecosystem also has a role to play. Now, one of the challenges with tech is that we are talking digital, which is somehow removed from the ground. It's remote sensing, satellite imagery, sensors, and so on and so forth. And yet there is also people living on the ground. There's local knowledge. There's a need for more inclusion and more equity in the way we're approaching this nature finance topic. Can you tell us a bit more? And if you can do that in a minute and a half max on the role of the tech ecosystem and local knowledge.
Yeah, I would try. But first, just continuing the flow, I think nature is the business model, right, for the whole economy. So all the sectors are dependent on nature. We consume products related to nature, and we are, even if this is software, there is a natural aspect in the back, and this is something that we really need to think of. And some mechanisms are important also in terms of how companies can use that. And this exposure, as nature being the business model, also relates to communities on the ground. And technology plays a very important role because also this can reduce costs, this can reduce risks, and also these communities, they can have ways to fund themselves and not use other extractive only sources, right? So they can be paid for conservation, they can be paying for restoration, and this can be also a new type of business model that the markets are coming in right now. And I really hope that it really gets more popular, because these types of instruments, they can have microtransaction mechanisms, pricing mechanisms that can actually help people on the ground to have alternative resources.
Can you continue and spend another 20 seconds with what would be your call to action for the audience of this forum to really drive and take blockchain-based green finance and nature finance to scale?
Yes, we need to have courage to innovate, so also see all the great things that are coming and be curious about how we can transform nature and also all the technology solutions that we have here. And the nature gap to be funded, it's huge, and the agenda is so short in terms of time, so we really need to find new mechanisms in many different dimensions, from the regulators to end consumers, that can really work, because if we don't get these instruments into scale fast, I think we will lose a lot in terms of humanity.
Marianne, 10 seconds.
Yeah, I
big
think.
Call to action.
Yeah, big call to action is start to get your feet wet and your hands dirty in the nature-related finance space, and apply blockchain where the market currently is not offering the governance and the incentives that you need, because it is a governance technology. It is a technology that can enable you to get that transparency, so you can connect with the assets you're investing in, and can help you think forward in terms of how can you strengthen that opportunity or investment case for your clients.
Same. Let's stop. Let's stop talking, let's start building.
Yeah, so what I think is ahead of us is a full system shift, and I think it's by coming all together and using and harnessing all the tools and all the means we have at our disposal that we are going to really be able to make a significant difference and protect the planet. So thanks a lot to the panelists. I think we're 30 seconds late, but that's not too bad. Thanks very much.